Good afternoon, everybody. Welcome to the recap. I am Laz. And that was quite a dramatic introduction. Yesterday, I talked a little bit on the recap, and even yesterday through lunch in the midday update, we talked about the coiling effect. And I said that, yesterday's really tight, narrow range, which we're going to look at in a second, could produce a large price movement, which is kind of what I had anticipated. Could have been today, tomorrow. I kind of left it open. But we're seeing that price movement. We got that expansion trade today, and we're going to look at that in the S&Ps. We're going to look at the Qs as well. Big down day today, relatively speaking. Really much more damage done on the technology side. But if you looked across pretty much every sector and every industry, there was very few. There was a lot of red on the board, not too much green today. So pretty broad wave of selling throughout the tape. One shining star today were coals, and we'll take a look at some of those stocks. But we're going to start here with the S&Ps, and let's jump into the chart. I talked about the possibility of a lower high, which is basically what we saw on Friday, where we got this initial down move off of the QE3, push through, and then this is now officially what is a lower high in place. So, I think you have to be looking at support levels here. And if the market can really power its way through this, and these are the spiders, which the 143 half area, 143, then I think we're going to go into the next, and I think the more substantial area of support down here around 140. You can see we held that 140 for the better part of almost a month, the beginning of August to the end of August, before we started that move to 148. So the market seems to me like it's going to continue to push down here in the short term. Your first level, your first layer of support, like I said, down here, the 143.50 area in the SPYs, 143 to 143.50, and then if we can firmly bust through that, I can see us pulling back even deeper to the 140 area. So when you get a move like this, where you get a down move and then a lower high, I think you have to expect that we are going to now potentially put in a lower low. That would be the natural course of events should this continue to play out. I said for years, so goes Apple, so goes the market. And, Apple broke support. Apple's been leading. Apple's had a big down move from about 700 to today's low around 620. So we've seen about 85 points here in about 2.5 weeks. It broke this key layer of support down here on 655, 656, and we saw a very quick 2.5 day trade down to today's low around 620, which was roughly this prior breakout area. So I think a short-term low has potentially been put in place. If I'm looking for a trade here, ideally the aggressive trade is through today's high. We could see a snap up. I ideally, when you have bottoming tails and topping tails, the low risk entry is about 50% into the tail. So if we can see a trade possibly down into roughly the 630 area, high 620s, that could be also an interesting place to step in for a counter trend trade. It is a little short term extended here, and we might see a trade back to that 650 area, possibly. Again, anything, more time we'll know, but I still like this trade against today's bottoming tail into support. Also, let me remove these lines. If we look at Apple a little closer and we take a look at the weekly, we did trade into the 21 EMA today on the weekly. And if we look back in time, you can see this 21 EMA here and over here, has acted as a fairly good layer of support. So I think that against today's low, like I said, could be good for a short-term counter trend trade at this point. We'll know more with time, but like I said, for good entry on a bottoming tail is like I said, into the tail itself, and a more aggressive entry is through today's high for those that are so inclined to take that type of counter trend trade. What else happened today? Let's look at the Qs, which is really the benchmark for NASDAQ. Well, the Qs, again, the Qs made a lower high. You can see that lower high was in place off of these, prior swing highs at 70, 71. And that lower high, again, down, lower high, lower low. So I'm anticipating, the SPYs will follow suit, and you might see some catch up in the spiders. Qs can probe lower. The first layer of what I think will be good support will be down here. This is where we broke out from back in early August. And I think we'll probably, trade back into that level. Now there might be, 1 to 2 day consolidation in here, but I do anticipate that in, sometime in the near future we will, probe lower into this more significant area of support. So that's, the Qs to me seem to be leading. Google broke its 8 today. You can see once we took out yesterday's lows, we got that trade down. And I suspect that this one could push a little lower as well. There is room to go down. The first layer of any real support would be probably down around this 720 mark. And again, if we go up a time frame, we look at a weekly. This is when you get real expansion off the 21 EMA, which is down here around 670. This is usually when mean reversion happens. We actually undercut last week's low. Each candlestick represents 1 week of time. We undercut that low, so that could be a short-term sell signal. And like I said, you could see a trade back to the lower 720s in the near term. So we'll keep an eye on that one as well. Going back to the S&Ps and the market, the trade, you got to look at smaller time frames here. This is a 60-minute, and let me remove all these lines here just for clarity. We came into today, this was Friday's down move. Monday was that very, very tight day that I talked about yesterday. Real, tight range, narrow type, very choppy, very common bear flag looking structure. And again, we got the break of that flag today. So, we got a little bit of a bounce towards lunch, and then the market started to tail off again towards the end of the day. So the market's definitely, trying to probe lower here. And like I said, just be aware that like the Qs, I do anticipate this will lead to we will undercut this prior swing low down here before we actually begin to really bounce. So a little bit more downside, we could see in this trade. Baidu, another interesting trade today, gapping down off of a downgrade, but I don't think that's really the story. I think the downgrade was the catalyst to get this stock going. I've talked about this one before, and again, let's go to the weekly. You could see this, multi-week, 5-6 weeks of consolidation here, just under the 8 EMA on the weekly and beginning to break down. This is a pattern that has a lot of weakness on a weekly chart, on a daily chart. This is one that I suspect could go substantially lower. Now, obviously, best execution would be, you always want to short on a bounce. You don't want to short at lows. So give this one a chance to set back up, but I do think Baidu could go down and test this prior 100 mark, if not, break that 100 mark, which is only a few dollars lower at this point. So for those that are so inclined, Baidu's been a major underperformer for the last 5-6 weeks, as the market's been generally on the stronger side. Netflix, probably another one that, an interesting looking chart here. Tough to trade this one. I talked about the short squeeze that was on yesterday, gapping down this morning below yesterday's lows, and it was just a sell from the open. Tough to get involved here is, gaps can change the structure, and that's exactly what we came into today. Netflix has been a weaker symbol. I really want to see how it acts as it pulls back here into these averages, 64 to 61. It did get it did break above this prior these prior highs. So I'd like to see if it can't maybe give you a little bottoming tail here off the 8 EMA tomorrow for a trade for those that are so inclined. So there's some interesting trades on the board. You really have to go at this tape. The one thing about selling is, and when selling hits the tape, is that it's always going to be faster. Bearish environments, when they do set in, generally are very, very swift, and stocks will make large price movements in a short amount of time. And that's just for sake of the emotion of panic. Bullish environments are slower, more methodical, grinding trades to the upside. And bullish environments generally happen over larger periods of time. Bearish environments happen, in shorter pockets of time, but the movements can be very, very swift. So be prepared. Just understand, the type of trade you're looking for and what you're trying to do. The VTF is a great source of information for those that are, trying to trade maybe from the short side or, want more color if that's what you're looking to do. For those that are, more bullish inclined, the key now is to wait for a setup, wait for buy into support, wait for a signal that says, potentially something has changed. Like, for example, the Apple. I'm doing my education spiel here. You now have a bottoming tail in place. Does it mean that it goes back up? No, it doesn't mean that the stock goes back up, but it means that you now have a tradable level from which you can use as a position of risk. So if you're looking to potentially buy now, be on the buy side, the actionable trade is be a buyer into the tail if it gives you that opportunity with stops, just below today's low. The more aggressive trade would be, like I said, through today's highs for a trade possibly back to the 8 EMA or even the 21 EMA, which are now firmly up here. So doesn't mean that it goes back up. It just means you have a level from which you can gauge risk. And as we know as traders, risk is everything. Being able to calculate and define your risk, being able to use the information presented to make calculated decisions is really what, in essence, this business is all about. So use your information wisely. As we pop back to the SPYs, you don't have that structure. You don't have a bottoming tail. You don't have anything here that says that the market, the general index, is now safe to step in and leg into a long. You actually have your first lower high in quite some time. So give this market a chance to do what ultimately it's going to do. A couple other symbols I want to look at, as today is really an interesting day. And again, we're looking at weekly charts here. Priceline to me is interesting. Priceline made that first leg down. You got your lower high up here. It then gave you a new lower high. Is this a new lower low from which, we may see another trade back down? You have a pretty substantial layer of support down here around 550. So Priceline represents one of those stocks, again, high beta, high risk, very volatile, but for those that are calculated and understand what price is telling them, there could be potential opportunity here. So keep an eye on that one. Moving out to coal, let's look at Walter, WLT, and these stocks, pretty much been beaten down. Very, very weak symbols for the better part of the last, few months. You can see just going back to, April, May, we've seen a pretty dramatic move here in coal. So not a very strong sector. We did see a little bit of a higher low here, showing some good relative strength. Obviously a little bit of a geopolitically oriented type symbols, and they probably will move with the election and so on and so forth. But technically speaking, diamonds in the rough today and stuff that maybe you don't want to just jump into, but maybe some trades you want to watch for some follow through on the long side tomorrow. So you have Walter, BTU, another one, ANR, just a couple of symbols to keep an eye on here, all showing some good, like I said, diamond in the rough type trades where you saw some money flow into those, awful looking charts. But for the short term, you might see a 2 to 3 day trade here. And again, something to keep on the radar. Banks, also interesting today. Goldman, really not participating in the sell-off. Here's a pretty quiet day in Goldman. It did close on the lower end of the range, and we do, potentially have that lower high in place. I am watching this level here in Goldman, this 121, 122 area. If it can't get through there, most likely it will follow suit and play catch up with the market. But definitely worth watching, as we really didn't see heavy selling. Here's JP Morgan, pretty muted action there. This morning we talked about oil. Here's Exxon. And oil into the morning looked pretty good. Very, very tight consolidation in Exxon. And we did see new highs early on in the session. But as the market continued weakness, this breakout essentially, came back in. This chart's still intact. And I would revisit this potentially, if it were to turn back up. Same thing in Chevron, CVX. Still intact. Couldn't really give you that momentum breakout trade that I think a lot of traders were looking for this morning, but still some notable looking patterns that are still coiling that could give us another trade to the upside. And lastly, precious metals, gold, I lost my 21 EMA here, no big deal. Gold, closing below the 8. You can see the 8's been a pretty good benchmark. So we did get a close below the 8 today. I think this could lead to a little bit of downside. Silver as well, but these are very gap-driven trades, and you might not see a day trade here, but I would anticipate maybe a little selling or a pullback here in some of these larger precious metal names, GLD, SLV, some of those symbols. So there you have it. A lot of stocks, a lot of sectors, different looks, technology, momentum, Amazon as well. I forgot to mention Amazon. But, if you were to look at a heat map today of the market, a lot of red on the board. I wouldn't necessarily be jumping in and buying the dip. Give this market a chance to set back up. You don't want to be the first one there trying to pick a bottom. It's just not smart money. So let the market kind of do what it's going to do, and we'll evaluate on a day-to-day basis. But there are some calculated trades on the board, and if you're inclined to be on the short side, there's definitely some possible opportunity in a couple of key symbols, out there. So that's a lot of info. I'm tired. It was a long day. I hope it wasn't. Again, as we've been navigating this market, we've talked about lower highs and the possibilities of pullbacks and these types of things. So I hope you're positioned, so at least you are in cash if you are not on the short side of the trade. I know shorts, being on the short side of the trade is a much more calculated, tougher type of trade for many of you, but it is a part of what we do. That being said, make sure you're in a position where you understand the risks that you're looking at, and with the symbols that you're gravitating to. Lots of opportunity on the board today, from Apple all the way down to Kohl's and anywhere in between. VTF, like I said, a great resource. And for those of you that are not as technically proficient as you need to be, make sure you're using some of the other resources that we have at T3 Live, like our education programs, our active trader class, our swing trader class, our momentum trader class, just to help you, again, be the master of your craft. As always, I'm Laz, a plan trader is a profitable trader, and I'll talk to you tomorrow. Have a great night.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.